maybe a year or two ago, we ran this analysis because we knew we were headed into the election eventually. And basically, we were curious whether housing stocks tended to demonstrate consistent patterns of performance depending on sort of which year you were in the 4-year election cycle. So these are sort of full year returns, and at the bottom there we've got year 1, 2, 3, and 4, which we call the election year. And what was interesting is that the period that we looked at, which is basically the early 90s through 2014, was that election years tended to be very good years for housing stocks, as did the years immediately following election years. So that would correspond in this cycle to 2016, the election year, and 2017, the year after the election year. And the reason, again, is pretty straightforward. It's, politicians, in an effort, historically at least, to get elected, tend to make a lot of promises. Most voters, there's a lot of overlap between voters and homeowners, and so, not surprisingly, a lot of those promises were geared or aimed at homeowners, which has tended to manifest in terms of positive housing equity related performance. What's interesting, and we have all the detail, so 95 is absolute returns, 96 is relative returns versus the market, and then 97 is just a very detailed look at each of the years. But I guess the key takeaway is that it hasn't really worked that way. So as we started out the deck, 2016 was a down year for housing. And historically, housing stocks have been up about 30% in election years. And then following election years, housing stocks have been up another 26% on average over these last 6 cycles, or last 6 election cycles. And this time around, again, we're off to a very slow start here year to date.